happy afternoon where things don't look quite like it's Armageddon outside, you'll be pleased to know, in this darkened room, and that you have flown in. We are truly honored to have Deena here on what is one of your last flying experiences before you have to settle down and just maybe stay in the same city. But it is so great to have East Coast, West Coast focus from both of you at such prominent venture capital firms. I sort of like the way it's called New Views on Venture Capital. Both of you have had a long history within building technology, investing in technology. But what the new thing, since at least November, is AI.
Yes.
So let's go there. Let's get this elephant out of the way. And Rebecca, from your perspective, you're a doomer, you're an optimist. How are you feeling about artificial intelligence?
I'm an optimist. I think I'm partly an optimist by trade and overall, but particularly here, I think the opportunities set to unlock and the efficiencies to create and the skills and abilities that we can't think of yet are going to outweigh the risks, which are there and are relevant, but are going to be manageable.
Okay, I like that they're manageable. Deena, do you have that same optimism that ultimately all the wringing of hands, worries about job implications, bias, will ultimately be outweighed by the positives in productivity and how it's going to help your particular area of expertise like healthcare?
Absolutely. I mean, we've been investing in AI for years. So if certainly there is a lot that's new now. It does feel like a paradigm shift, but we were early investors in Hugging Face and Runway. In the healthcare space, we actually sit on a board together of a company called A-Life Health, which is using AI to transform fertility care. There is still so much more, and we're incredibly excited about the potential. Of course, notwithstanding the regulatory, environment that we're in right now, and making sure that everything is done safely and also without bias.
Go to regulation in a moment, but to the point of where AI is really disrupting, where's your brain space at? Is it more inbound, people wanting money, people calling themselves artificial intelligence companies, you trying to sort wheat from chaff? Or is it, how do I ensure the portfolio companies I have that aren't truly built on AI are ready for that disruption?
I mean, I think it's a little of both. Obviously, as a consumer, I love using it for bedtime stories for my kids and recipes and so on. But as an investor, we're looking at what the really big platform shifts are going to be. And I think any tech company right now needs to take a really close and deep look at how they're using AI to make themselves more efficient, particularly in, well, frankly, in every field. But I would say when it comes to healthcare, there is so much opportunity, so much latency, so much bureaucracy. But it's a very different world when you're still talking about fax machines in the same sentence as ChatGPT.
Well said. And what about the fintech space, Rebecca? I know this is an area that you're particularly got some expertise in as well, across the board, as well as healthcare. Some have said maybe fintech isn't the first area of adoption for AI. What would you make of that?
I think that the incumbents across industries in healthcare and fintech and education have a big opportunity here, less because of their industry-specific nature, though there's some of that, and more that the idea that where there's rote tasks or efficiencies to be created by people, it can be a very powerful tool to create that. And that's cost savings, that's time savings, that's adding value into the stacks that's already there. And you asked about kind of existing companies versus new entrants. I think one of the unique things about this technology shift that's somewhat different than if you think about mobile is that the incumbents not only have distribution advantage, but they have data advantage that's very, very relevant, and that the technology is easier to use. So integrating it into existing platforms is a lot easier than in prior technology shifts, so they can do it faster, get up to speed, and use multiple advantages. And I think you're gonna see that now and for a while across industries that give these big players a real opportunity if they can jump on it.
But then what does that leave for the startups? I mean, we had Hugging Face on the show earlier today, the Equality Show, thinking about AI ethics in particular, but this is a company that's thinking about open source foundational models.
Yep.
Or do we end up in an open AI eats all our lunch sort of environment, do you think?
I mean, I think this is where we're starting right now. There's a big opportunity for new entrants, especially in specific spaces. So healthcare is definitely one of those where, large language models that are built on public information are not going to be as relevant in the context of clinical care. That being said, there's still a lot more to be built on top of OpenAI, and we're seeing those types of integrations. I think Rebecca has a very good point. It takes a lot of compute to build something new. It takes a lot of hardware. That's why we're seeing what we're seeing with NVIDIA. So it's going to be difficult for a new player player to start from scratch, but that doesn't mean it's not going to happen. I think we're going to be surprised what comes to the market, and we're keeping our eyes and ears open to see what's out there.
Yeah, I think one of the things that's really, really cool about this is that it creates opportunity for new user experience. The idea of creating new tools and products that are fun and create something different for the user to interact with. We haven't seen as much of that in the last, set of years. And there's an unlock here where if by using it you make the platform stronger, the differentiation might be that when you think about AI-driven learning or AI-driven consumer fintech, that user experience may become a differentiation over time.
A lot of this, of course, is built on user data. And a lot of this is thinking about the ramifications of privacy, of fake news, of also, ultimately bias. We sit here as three women, and a lot of the data is old, doesn't quite run on as diverse set of data as we'd like to see. Yeah. Rebecca, do you think self-regulation, overall government regulation, is the way that we're going to end up going for AI, do you think?
I think it is probably both. My hope is that we have learned lessons from previous iterations of technology shifts, and so we are not entering this one cold. And so we've learned that if you just build with no view towards future problems around data and privacy and bias, it becomes too late too quickly. It's very hard to adjust, and so you have to think about them early. As we know, over-regulating stifles innovation early and has a significant risk to it. Under-regulating creates downstream massive problems that are hard to resolve later on. So my hope is that it's a combination of both and forward-thinking in a measured way.
Because there's been criticism, in fact, from Hugging Face, that this whole humanity is going to become extinct because of AI is kind of a bait and switch from actually the bias is already here in facial recognition when the police are adopting it. The bias is already within the AI data. How do you think the narrative of regulation is going in the US? And when you look at what's happening in Europe, do you have confidence, trust, ultimately?
I mean, I think this narrative of humanity is facing extinction is something that you've seen historically whenever there's any new major platform shift.
Yeah.
I mean, even from the old Jetsons cartoon, right? So that to me is not surprising. That being said, I think that the sort of empathy that you're seeing from AI and the real sort of humanness of the language is something we've never seen before. In the healthcare context, there was a big empathy study that was published in JAMA that actually showed that AI was more empathetic in patient interactions than many clinicians. That is fascinating. And so that
they're not exhausted.
It's exactly, they're not, but they could be replicating the bias that's systemic in healthcare as well. And to your point, I think the right balance, that Goldilocks situation, is something we still need to find. But I think it's going to be a while before regulators and, frankly, even the rest of us know exactly what that looks like.
And when we see the explosive growth that you can't see behind you, but growth in generative AI, absolutely rocket ship at the moment. And we're still trying to understand, ultimately, the value that's created from a dollar perspective.
Yes.
Do you think, Deena, there's been a bit of hype, like we look towards ultimately the hype that we saw in crypto, and some now say coming back down to a more normalization, or whether it's some winter for the foreseeable. Is AI hype or reality from your perspective in terms of the money being put into it right now?
I mean, I think it's a little bit of both. There certainly are funds who are dedicating, hundreds of millions of dollars just to investing in AI now. And I think the fact that, our grandparents are talking about it the same way they were asking about crypto just a few months ago says something. That being said, I think any tech investor will tell you that this is a real, actual seismic shift that is going to change the way that technology is produced and consumed for decades to come. So I think it's a little bit of both.
There's been some hand-wringing as well about the race. Whether it's a race in the US, whether it's, we've got Rishi Sunak from the UK over wanting to say that they're a big player within the United Kingdom in AI. And then we look to China. And it seems to have added yet more fuel to this geopolitical tension fire. Rebecca, do you think we have the right to be saying that? Is it realistic, some of the worry that's coming from Silicon Valley and indeed from New York in general?
I think that oftentimes with technology shifts, first doesn't mean best, right? It takes time to develop the right tools and perspectives and platforms that overall become winners in the category. So I think race has to be contextualized. That being said, do I think it's an important time in the history of our country to make sure this is the best place to be building new technologies and innovations? Absolutely, yes. I think there is new risk to that. I think that the speed of technology building outside of it has also accelerated. Some of that is good, but it's important to this country to be the best place to build new ideas and to create these platforms. And we need to make sure we have the environment to do so.
Is it? I mean, like I'm looking at the crypto sphere right now. We had Brian Armstrong on yesterday. You've just been talking about Binance in the show earlier. The regulation here in the US seems to, some would argue, be retrospective in its action and driving talent away. Are you seeing that at all, Deena, in people building?
I mean, we're seeing some extraordinary companies getting built and some really talented folks. So I'm not too worried about that yet, but I do think that if the regulatory environment goes a little overboard, we're going to see some more risk there. And so that balance needs to be had. But, you know, I'm from Silicon Valley. I'm a little bit biased there, although New York is pretty cool too. But I think there still is a bastion of talent, and San Francisco is thriving right now, despite what is, what is often seen on Twitter, with incredible young people who are putting their minds to work. I think it's the most popular theme right now in the current YC Combinator class, and
yes.
So I expect we'll see lots more to come.
Talking of YC, it's interesting they are at last returning in person. I think this is the first time we're going to be seeing them coming. And interestingly, whether or not that's particularly international in its nature of founders. And I'm also interested in what diversity we ultimately see in those founders. How are you seeing that landscape shift at the moment? Because we're in Pride Month, we're thinking about, there's a lot of worry in the macroeconomic environment that people return to how they're used to writing checks, to the people they're used to writing checks. Are you seeing that, Rebecca, or are we still seeing money going to diverse CEOs, founders?
I think it is a tough time. I think when the markets shake and get more challenging, people pull back on things that felt experimental and go towards the things that they have seen success in. And often that hurts diverse founders the most. The numbers are out there. Last year was pretty abysmal in terms of funding for new diverse founders. My hope, though, is that we are going to see some real success from diverse founders in this economic environment. Diverse founders are often more used to operating under constraints, without as much capital as they might desire, without believing that they can always fundraise. And so sometimes a market that feels more foreign to some types of founders feels actually very comfortable to diverse founders who have built their businesses under similar constraints. And that might allow them to thrive in this environment and show that that's where success can come from. But right now, it's been a very difficult market for diverse founders.
Are you feeling the same? Is that it felt like there was a sucking sound at the beginning of the year, and everyone was like, "Oh, please don't let that be true." Is it?
I mean, I'm of two minds. I definitely, agree with the headwinds that are facing a lot of these founders. That being said, I think if you look at the data, you look at who's performing better. If you look at public market indices, just speaking about women, there are many different facets of diversity, but women perform better across the board.
I think we've got a chart to show when they're ready to bring it up.
There you go, exactly.
Voila.
Women on boards, women CEOs, we're talking faster time to profitability, and overall, across every metric, better performance. And so smart investors who are looking to make smart investments are looking at data points, and that's one of them. If you look on the private side, I think some of the most successful companies we've seen, even in this downturn, happen to be in women's health, an area that was historically underinvested in, and now is actually seeing up rounds, which is fairly remarkable in any sector right now, but particularly in healthcare. Companies like Maven Clinic, whose board I'm on, for example, and I expect we'll see more of that. Finally, dollars being put to work, a massive part of GDP, and many of these founders happen to be women.
A lot of money got raised prior to this macroeconomic headwind, and you've got dry powder. Are you able to write the checks you want to at the moment?
We are. We just announced our 8th fund, and we are super excited to put money to work. We believe this is going to be the most successful vintage. I think historically we've seen that in other downturns. And the fact of the matter, as Rebecca said, is it's probably never been harder. It is going to take so much grit and resilience, and all of that I think makes extraordinary, strong-willed founders with incredible conviction, and we're out there looking for them. So we're still investing, and we're excited about what's out there.
And where is it most competitive? Is it the seed rounds? It's a very early stage. Are we ultimately having to just hold our breath a little bit on big later rounds for the time being, Rebecca?
Yeah, so the seed market has stayed the most competitive by a pretty significant margin because that's where the capital is kind of condensed. As you get later, A, B, C growth, it's gotten slower and slower, but that also creates a lot of opportunity. We are excited about those Series A and Series B's rounds. There are great companies being built. There are ones that are still seeing momentum despite difficult headwinds, and there's less capital. And so from an investing environment, it's pretty exciting. And I also think, companies are building with different priorities in mind, with strength of unit economics, with, foresight to profitability in the future, with some of the pillars that we've always believed are going to create long-term, very successful businesses. And they're highlighting them and prioritizing them earlier in their journey, which is exciting to invest in.
Do you think the talent pool is richer at the moment or not? Do the startups have the bandwidth to be able to pay what some of this talent that is coming out of big tech are waiting for to be hired again?
I mean, that's one of the things that's really exciting. There has been such an unlock of talent with all these layoffs. We've seen extraordinary people to our benefit who now are open to joining startups, to starting companies, who have the ability and the bandwidth themselves to do that. And who understand the value of equity and sort of the tumult that it takes to really start off early stage and get to that. So we've seen a lot of that, and I think we're going to be seeing more to come.
And what about the companies that we were all excited to see go public, the Reddits, the Instacarts, the whoever it might be? They must be having to think creatively as to how to satiate their talent right now without this big liquidity event that was potentially on the horizon. Do you see do you see IPO markets starting to come back, or are we so far away from that at the moment, Rebecca?
I find it very hard to predict, but I think that the patience is going to run out of some of those companies that have been really waiting and feel ready to do so. The ones that were more on the edge, the ones that the unit economics are shakier, may wait, but I'm not an economist, so I don't know, but I have a suspicion that we will start to see people push out because they feel the strength of their business and they just don't want to wait forever. And that will be interesting to see. There are some really exciting businesses waiting in the wings that I think we could see go public. But to your other point, I do think that it's creating an interesting challenge and environment of how to satiate those employees who have been waiting there. Sometimes when they worry that the prices that those marks are sitting on are no longer viable, or that the liquidity event is further than they believed. Difficult and challenging for very late stage companies, another opportunity for some of the earlier stage companies that might have their eye on talent that they previously weren't able to get.
It's funny, isn't it? That was a bit sort of, ultimately we see this conversation is a cloud with an enormous silver lining that everyone can't stop talking about, which is AI. But I think about when our Bloomberg Technology show was reborn in its new time slot. And it was the day that, we saw Silicon Valley Bank go under, ultimately be rescued. Are we still talking about that? Have we moved on in some way, Deena? Have we, from the ashes of that, started to see success?
I mean, we all have our stories of where we were, what we were doing.
Are you scarred?
There's definitely some scar tissue there. And I think, again, I'm not an economist either, but it's clear that there's still more to come from that as well. But at the same time, the sort of juxtaposition of that with the excitement around what we're seeing in AI, overall, there's still a lot of appetite. And so it didn't have the sort of apocalyptic effect on the industry that some feared that it would. And certainly the efforts of the government, I think, helped to make sure that wasn't the case. But we're still, people aren't really talking about it. It's kind of yesterday's news. Now it's the smoke and, the debt ceiling and several other things that we'll be seeing.
Did it make you or your networks closer in that moment? There was this feeling that there were a few very loud, slightly older white guys basically on Twitter sort of shouting about the need to save certain banks or not. But behind the scenes, I'm sure there was amazing collaboration.
Oh, there was so much.
Yeah, it was an amazing moment of seeing the help that an industry can provide to each other. We actually recently sent out to our portfolio just the stats of the emails that were traded that weekend and the help that was given between a portfolio of 120 companies. And it's astounding, and those are moments. But I also think it's a reminder that in the face of exciting innovation and a lot going on, there's a lot of macro uncertainty, and it looms, and it can come out and rear its head. And ultimately, it matters that you don't build companies in a vacuum, no matter where you're building them, and you have to have an eye towards the macro condition you're building in.
So to leave us both of you said you were AI optimists. Both of us have talked around the clouds and the silver lining. One application or one technology that you're really excited about in 2023 going forward, Deena, before you?
Oh, we're not supposed to pick favorites, but because I have my co-investor here, I'll talk about AI and women's health, and particularly infertility, which I think is really exciting, and I think sort of emblematic of various other applications in this space. And this company, A-Life, is using AI to make the 1 in 6 people globally who cannot have a baby have the potential to do so. And they've been doing so for years before we were all talking about AI. And they're doing so by recreating the data set that informs the clinical protocol, which is critical to actually making sure it's good data in, good data out. So that's one example I'm really excited about.
I'm excited about AI intersecting with learning. I think, how people get educated and the relative bias and access to that has been really challenging in this country for a long time, and the ability to democratize access to very high quality personalized learning will create big business opportunities and a lot of changing landscape for learners at all stages of their journeys, and will be really exciting.
I like it. It's about birth and it's about equality of those children who are being born. We thank you so much. What a wonderful conversation. It always flies by with these two. We thank Rebecca and Deena, and we thank you for also being engaged. Thank you very much.
Thank you.